G'day, Binanceans, and welcome to this week's Binance Beach. As always, I'm your host, Lotto, and this week we welcome back crypto analyst and all-round markets wizard, Adam Stokes. Welcome back, Stokesy.
Great to see you, brother. Happy Friday.
Yeah, after a long weekend last weekend, and looking forward to another weekend this weekend. But we've got a heap of crypto content to get through first. Today, we're looking at a bit of an existential question. Why do countries want Bitcoin? And this is stemming off the back of a whole heap of crazy news during the week. Honestly, right now, crypto is moving so fast. I don't even feel like I'm keeping up. I have one day off for Australia Day, and then it feels like I'm behind. I don't know how you're keeping up at the moment, but it's going at a crazy pace.
Yeah, well said. Like I've been in this space for a decade, and it's on top of several decades trading, and it's just I can't keep up either. And those who think that they understand all of crypto know you have to remain curious. And I also say remain kind to yourself, because as you said, you're a day away from one day. It's like, man, I've missed out on so much. It's moving so fast. But when we move to what's happening with government stockpiling Bitcoin, they have to move to stockpile something. So we can see we have strategic reserves of many things. It could be iron, gold, wheat for some countries, oil, of course, when it comes to war stocks, and other stocks, of course, for war. But when it comes to financial protection, we need to stockpile something that protects us. And what protects us from inflation? Well, some say it's gold, but of course, gold, we don't know what the supply is, and they keep pulling more out of the ground. And even some that we know that's in the ground that we can't pull out because of legal requirements, that is huge stockpiles of gold in areas that are protected from environmental laws, that really affects the supply of gold. So we look for something else. What is a truly finite and scarce resource or commodity or stock that we can refine, that we can hold, that can't be printed further? And of course, that's Bitcoin. And many countries are waking up to this. If they hold their value, their efforts, their energy into the US dollar, well, that's going to be diluted straight away. If they hold it in gold, well, it's not performing so well. If they hold it in oil, well, of course, we can see that it's constantly produced as well. So where do you put some of your reserves? And the answer is Bitcoin. And many people at the retail level have understood this for years. We can now see at the institutional, or so the retail level, we've been leading the way. Then at the institutional level, they're moving in. You might look at Michael Saylor as an example, and the performance of MicroStrategy is next level. But now we naturally progress, my friend, to the federal level or the national level. And this is where governments at the state level or the federal level, we can see in the United States, we've got multiple states within the states that are stockpiling lots of this gold. And now we're waiting for the United States government itself to stockpile this digital gold, I should say. And the race is on because other nations are doing it. El Salvador has been doing this for a while. There's arguments that Qatar has been doing it, and maybe Saudi Arabia. And I'd suggest many countries that are keeping it on the down low. They're keeping it on the down low, my friend, because I think you and I would agree to this. Bitcoin is, dare we say, near an almost sure thing. Yeah, there's no certainties in life other than death and tax. But because it is getting so much momentum, and it is so hard, and it is so scarce, many individuals, institutions, corporations, nations, and governments are now moving to hold this stuff. We're just waiting for Trump to pull the trigger, but you can see in the background, maybe he's getting a little bit of lobbying pressure to say, no, don't stockpile Bitcoin, stockpile my coin. And this is where we can see perhaps Ripple's coming in there and some of the American-made coins. But the difference for everyone to understand is that Bitcoin is understood to be a commodity, that is a digital gold, whereas XRP, Avalanche, Link, all of which I hold, they're really a stock or a share or a security, in the sense that it's a commercial private entity that produces these things at a profit to themselves, which is fine. But it's important that we make the distinction. There is a big distinction and a difference between a stock and a commodity, or a security and a commodity. And once people make that distinction, they start to realize, this is where there's Bitcoin and then there's everything else.
Man, so much to unpack there. I think the difference between Bitcoin and the rest of the crypto assets, and whether or not the rest of the crypto assets should be considered for a stockpile, is one of the most interesting questions that we have right now. I'll pull up this quickly, and this shows a list of assets that are currently held by the US government. They've mostly, if not all, been seized as far as I'm aware. There's almost 200,000 Bitcoin there, valued at 20 billion. Then there's an enormous amount of ETH, USDT, wrapped Bitcoin, BNB, some stables. There's a whole bunch of stuff that the US currently holds. I'd love to get into the distinction between Bitcoin and the rest of the market, and whether something like ETH, which after the approval of the ETFs maybe could be considered a commodity. I'm not sure if we've had that tested yet, but whether that could be considered for an asset stockpile. And the language here, I think, was really important. I know when I chatted to a few friends of mine who are Bitcoin maxis, they say we are getting a strategic Bitcoin reserve. It's an SBR, but the Digital Asset Working Group has come out with the digital asset stockpile. That language has changed, and it very well may be the case that we see a number of assets in this strategic reserve and not just Bitcoin. What's your thoughts on that? Do you think we'll see many assets in the stockpile and not just Bitcoin? And do you think that's the right call?
Yeah, so I love the way you've set up this question, because let's face it, there's a big divide within the crypto community. That is, the Bitcoin maxis are like, no, there's only Bitcoin, and then everyone else is saying, but my coin has utility. A very wise person broke this down for me. They said, does the United States government stockpile Amazon shares? And it's like, well, no. And does any government stockpile Google shares? And it's like, well, no, that sounds silly even saying it. So then when you translate that into the crypto land, it's like, well, why would any government stockpile? And we need to make a difference between stockpiling as a reserve and utility for something to use. So we can see government stockpile gold as a reserve, but they don't really use it for electronics or jewelry. That's not what they're stockpiling it for. So once we make the distinction that governments typically don't stockpile shares and stocks, we can start to see, okay, we've got the digital gold of Bitcoin, but then we get into this gray area. And I'm glad you raised that table before, because let's look at Ethereum as an example. Ethereum, some say, is the digital oil of the crypto land. So you've got the digital gold being Bitcoin. Some might say that Litecoin is the digital silver. I'll leave that one alone. But then you've got Ethereum as the digital oil. And you know what? There's a lot of truth in that, and the digital oil for the crypto space. However, the difference is that there's a lot of competition with Ethereum. There's many chains that are coming up and competing against Ethereum. So governments absolutely need stuff to use. You know, they've got vehicles, they've got fuel, they've got planes, they've got buildings, and it gets into a bit of a gray area when we talk about stockpiling. But what governments absolutely have is they have a stockpile of gold, and they hold that as a resource, as an asset, as a protection, as a hedge for many different reasons in the financial space. And this is where we can see Bitcoin is going to be, I believe, stockpiled as that hedge against inflation and to protect, to an extent, their economy. When it goes on to Ethereum, it's like, well, again, there's many competitors to Ethereum. So would they stockpile it, or would they just use it? Now, the language is, you mentioned this, the language is very important, because you can see, instead of saying just a Bitcoin strategic reserve or an SBR, strategic Bitcoin reserve, we can actually see now that they're saying digital assets. And the divide in the crypto land, I'm trying to be careful with my words because it's going to trigger some people, is where you see Garlinghouse perhaps getting in the ear of Trump and saying, no, you want to stockpile XRP. Don't stockpile that coin, stockpile this one. And then you have other crypto creators and boards and enthusiasts saying, no, Trumpy, stockpile this one, not that one. And of course, you have that infamous video of Jack Mallers recently coming out saying, we need to stop Ripple doing this because it's not on. Look, at the end of the day, I think Trump is surrounded by very wise people, pro-crypto people. Like or hate Trump, he's a very successful and competent businessman. That is an objective truth, even though that will trigger some people in itself. And what I'm glad with what's happening here, my friend, is that he's not rushing into it. That is, he's already been pro-crypto. He's lifted his boot, the American boot, off the development of crypto in the United States, therefore arguably around the world. He's moving to get some type of reserve. I would suggest it should be Bitcoin, but you've shown that table before. He's already got a lot of other cryptos. The question for all of us is, do we want to stockpile something that is centralized, made by a corporation and for profit for that corporation, or do we want to stockpile something that is open, borderless, neutral, censorship resistant, and absolutely has a hard cap? I believe, in my biased opinion, that it should be a stockpile of Bitcoin, but I believe also in the free market. And if the free market including Donald Trump himself and his cabinet equivalent, want to stockpile some of these other coins. At the end of the day, my friend, as we all come together as crypto enthusiasts, we all win. It doesn't really matter what he stockpiles. As long as he stockpiles something, we're all winning together.
I don't know if I 100% agree with that. I think as long as he stockpiles Bitcoin, we are winning. I think if we didn't stockpile Bitcoin and exclusively stockpiled other centralized currencies, then I think that would be a significant move away from Bitcoin as a global hedge against inflation, as a global reserve currency, potentially one day. Like, I think that would be a significant move away. Also for the community, particularly the Bitcoin community, which lobbied very hard. So yeah, I think as long as Bitcoin's a part of that mix, it's a positive move forward.
Concur. If I should have put in the caveat there, and I agree with you. If he said everything but Bitcoin, you've got complete consensus with me there. But if he goes, we're going to do Bitcoin and a little bit of this and a little bit of that, hey, you've still got the United States government buying Bitcoin.
I think,
and over time, you're going to see Bitcoin perform better.
I agree. I think the counter to maybe some of those points that you made, and maybe it's a more like protracted argument, but if we look at US dollar dominance around the world, and I don't have a chart for this, but that's been loosely dropping over the last 20 years. US dollar dominance in trade, in global reserves. We see other countries starting to sell down US bonds like China. So generally, I think we can agree dollar dominance is on the way down. Then you have this rise of this ecosystem. It's really good. I think it was a Fidelity report earlier in the year about the dominance of US dollar stablecoins on chain. And while the share of US dollar global trade is tailing off, it might be hitting like 60% now, or maybe it's even heading towards or below 50%. US dollar denominated stablecoins are responsible for 99% of stablecoin usage, right? Like nobody uses the Euro Circle stablecoin unless you're legislated to by MICA. Like nobody uses AUDD or an Aussie dollar denominated stablecoin. Like those have very niche uses and are restricted to corners of crypto, like trade between specific local suppliers. It's what's the word for it? Wholesale trade kind of use. And so if the US wants to protect US dollar dominance in trade and stablecoins become what they are promised to be, which is the primary method for global trade and cross-border payments, then I think there's an argument to be made for protecting the key on-chain ecosystems which enable that trade. And that is ETH, there could be Solana. Those are the two that I call out right now, which have already enormous amount of stablecoin volume. But don't you think that there is an interest in the US if US dollars are or continue to dominate on-chain trade and on-chain stablecoin usage, that protecting those ecosystems, which are proof-of-stake ecosystems, by holding a significant amount of that token maybe is justified? That would be the counter. I don't know if that applies to Ripple, but it definitely applies to a couple of those more or less decentralized layer ones. Do you have any thoughts there?
Yeah, great point. I think in the long run, Bitcoin will dominate. And the reason why Bitcoin will dominate, and we're looking at stable coins. Let's go back a step. Why do we want stable coins? Well, we want stable coins because we want to understand what is the value of this thing. And this unit is pegged to that dollar. Okay, well, now we have some type of stability. But the issue with that is because they keep diluting what it's pegged to, that a stable coin in itself is oddly unstable. A stable coin is only stable in its pegged value to the dollar, but the dollar is unstable because, as you described correctly, it's losing its dominance, and beyond that, it keeps getting diluted. It loses its purchasing power. So the whole world, including America, is looking for a genuine peg. What is that peg? Now, the gold buffs will say it's gold because an ounce of gold has purchased pretty much the same thing over history. That is a man's tailored suit and a pair of shoes. Now, going all the way back to a toga and a pair of sandals or a tailor-made suit today, an ounce of gold has held that consistent purchasing power. So then the gold maxis will say, well, why don't we peg the value to gold? Well, we tried that, and we can see in 1971, US broke the deal and they de-linked the peg. So now we're going to say, right, we're going to peg the value to the US dollar through stable coins. And that in itself will eventually fail in my mind, because the dollar keeps going down. And if we go forward, you start to understand in my mind that it's got to be a Satoshi. It has to be a Satoshi, because I can't print it, you can't print it, he can't print it. I don't trust you, you don't trust me, we don't trust them, and they don't trust us. So let's remove the trust. And this is where the trustless component comes into it. It's also why I think BRICS isn't going to work, because BRICS says, right, one nation has tried pegging a dollar to a bit of gold. Well, that didn't work, but you can really trust us, because we're now more than 30 nations doing baskets of stuff stored all over the world, and we're going to peg a BRICS digital currency to whether it's a piece of gold or a basket of goods. Well, that's not going to work. So you say, well, what do we peg it to? And you say, well, it's so obvious. You peg it to a Satoshi. But then we go further and say, well, why do we need to peg anything to the Satoshi? And say, well, why don't we just use the Satoshi as the unit of account, the store of value, and the medium of exchange? And this is where I agree with the Bitcoin maxis. In the future, it'll just all be Satoshis. We don't need all of these currencies. That's not to say there won't be these currencies, and I believe in the free market. It's just that when you actually go forward, it's like, we just need Satoshis. And it's not that we need a vault full of stuff in the background, whether it's US dollars or oil or Ethereum or gold. We just need scarcity and trust. Where I think the argument is lost in the whole crypto land is that, oh, Bitcoin's too slow. And it's like, well, you're probably too young to remember this, young man. But in the olden days, we had this thing called credit card in printers, or I'm barely old enough to remember it myself. So you take a credit card, you'd put it on a machine, you'd go clink, clink, and it would take an impression of the credit card number. You'd write in how much you had purchased at the shop. And everyone was saying, well, credit cards will never work, they're too slow. Well, of course, look at the technology now. If we could take a credit card and make that with many thousands of transactions per second, we can do the same with Bitcoin. The anti-Bitcoiners will say, no, it's too slow, it's too energy hungry, it's never going to work. I say, look, if we were able to turn gold into EFTs, as in electronic fund transfers, even though we delink the gold from the value of that dollar, and we could take checks and make them more efficient, and we could take credit cards and make them faster, I am very confident that we can already take a very fast comparative digital asset, which is Bitcoin, and make it more efficient to make that the global value, the global peg, and the global medium of exchange. Where I think it all falls down is that if that were the case, banks are going to lose, Ripple's going to lose, intermediaries are going to lose, Visa's going to lose, Mastercard's going to lose. So everyone's now trying to hold on to their piece of the market, whilst Bitcoin is just ticking along in the background, just getting stronger and stronger and stronger. Some say it's a medium of exchange, some say it's a store of value, some say it's meant to be this. I say, let the market decide. If the market wants to use Bitcoin, they will. And at the moment, when they keep printing the US dollar, as all currencies are being printed, everyone's leaning towards Bitcoin.
Yeah, I think in a free market for money, it's clear that Bitcoin is a winner. It is eating everything else. It's eating every other asset class. It's eating every fiat currency. And even after 15, 16 years worth of Bitcoin, we're still yet to see a genuine competitor. And that speaks volumes to the promise of this piece of technology, of this potential currency. The analogy for me is so simple. You don't use a meter ruler and change the number of centimeters in a meter. You don't change the temperature at which water freezes or boils. We don't change our units of measurement. We don't have 110 centimeters in a meter and then 120 centimeters in a meter. And then we increase interest rates and it's back to 118. Like, why in the world do we use this vastly deviating measure of account that is fiat currency to measure, finite resources like food or cars or whatever you have in the world that there's a fixed amount of? Why do we use this flexible supply of money as a yardstick for measuring how much something is worth? It just doesn't make sense to me fundamentally. But
that's a really good example.
But with a fixed amount of Satoshis, a fixed amount of Bitcoin, a hard cap supply, it's very easy to measure things. And I mean, you can probably dive into the reasons for that. Like, clearly everything is deflationary against Bitcoin. Everything gets cheaper against Bitcoin. And there's political and socioeconomic and geopolitical reasons why that might not be palatable for many people, many institutions, many countries. But it is so easy, the idea of measuring finite assets against a finite measurement or a fixed measurement. It's so obvious to me.
That makes perfect sense. And, using that analogy, expanding on what you were saying there with the measurement, we don't even know what the measurement is because the governments themselves, the US government doesn't know how much dollars they've got. Like you and I right now can go on chain and see exactly how many Satoshis are in circulation. We can see what's happening in the background. And we can even see what wallets they're in. The US government, the most powerful government arguably in the world, that's subjective for some, they don't know how much money they've got. And when it comes to CPIs, like expanding again on your analogy, right, the ruler is now 120 centimeters. It's like, well, no, he says it's 108. No, the ruler I'm holding is 100. So we can't even get consensus on what the length of the measurement is. So we need to remove that commentary, that speculation, that change, and just simply go with the hardest, most soundest, open, borderless, censorship-resistant money we've ever had. And of course, it's Bitcoin.
It sure is. That brings up an interesting point. This tweet kind of went semi-viral. I'd love your take on this. Sam Withers works for River, which is a Bitcoin. They're a Bitcoin company. He called out 6 months ago. He was calling for the decoupling of Bitcoin and crypto, and a lot of people have been calling for altseason, cheering for altseason. I don't think anybody can make a case that we've had an altseason yet, apart from a few memes popping off. A little AI sector run, but that kind of sunk after DeepSeek. I don't think we've seen altseason yet. And you really even just need to look at Bitcoin dominance, which is still sitting close to 60%. It's on a 3-year charge, or at least a 2-year charge up from 2022 up into 2025 and doesn't seem to be faltering. And Sam makes the case that between nation state adoption, between institutional adoption, between ETF adoption, Bitcoin is decoupling from crypto. The volatility is shrinking because no longer as volatile as it was or as volatile as the crypto space. I saw something during the week that was Bitcoin volatility now similar to NVIDIA, similar to tech stocks. It's not to say it's correlated, but the volatility is quite similar. So do you think that these significant moves from the US, from other countries in the world, like El Salvador, are causing a true decoupling of Bitcoin from crypto? Or do we expect that the rest of crypto, at least from a market cap perspective, will catch up again to Bitcoin in the next year or two?
Great topic. I'm thoroughly enjoying this. Let's go first of all with the volatility. So we can see that now that Bitcoin's over $2 trillion, when you have a market cap of over $2 trillion, and Bitcoin's, of course, the 7th largest market cap of anything in the world, that volatility is naturally going to reduce. When you've got a market cap of something of $100, you only need $100 to go in or out, and you've changed it by a factor of 100%. When you've got a market cap of $2 trillion, that's a lot of money that you need to come in or out for it to be affected as much. So certainly, I think the volatility is dying down. When it comes to Bitcoin dominance versus the rest of the market, that dominance is very strong. And typically, by this time in the cycle, we should have seen that dominance dropping and the altcoins performing a bit better. I agree that we have not had an altcoin season, and it's just been random pop-offs here and there. The real issue, my friend, is that we've got over a million cryptos being made every week now, with the technology of Pump.fun and easy to build a meme coin on Solana. It's easy to build a meme coin than it is to build a website now. And consequently, the market is being flooded with meme coins. Just before our interview, I was on mainstream television talking about this. And some of the mainstreamers are saying, well, in fact, because of all of these altcoins coming in, it's actually, if you will, wiping a bit of the luster away off crypto. Because those who don't understand crypto, they say, oh, well, it's all just a casino. Look at you, you're all just making these coins. You and I understand there is Bitcoin and then there is everything else. When we go into the everything else space, the everything else being all the altcoins, in the past cycles, there was only a few thousand altcoins. And so you had millions, hundreds of millions, billions of dollars pouring into the crypto land. And the billions of dollars was only spread across a few thousand altcoins and Bitcoin in itself. And some of the money was actually coming out of Bitcoin and going into the altcoins. So altcoins were pumping beautifully. It is different now. It's different because step one, we've got millions of altcoins. Step two, as you said, we've now got all the ETFs, institutional investment, big adoption. We've got a supply shock. We've got the history and the data of Bitcoin's performance. So when people are coming into the market now, if they do go into the altcoins, as many do if they're newbies, because they don't want the $100,000 coin, they want the 1 cent coin because of unit bias, and they don't want the 100% return, they want the 10,000% return because of human greed. There's still going to be money that goes into the altcoins. I have no doubt that there's going to be some rise in the altcoin prices, but because it's being so diluted by the sheer number of altcoins out there, I think that we're not going to see an altcoin as impressive as the past. And I think for me, the longer I've been in this space, it's just like, I do my dollar cost averaging and I'm like, just put it in Bitcoin. It's just easier. I've got so many altcoins now, and maybe they're going to do well, but they're all competing with each other. I mean, how many better Ethereums do we have? How many better Bitcoins do we have? How many better real world asset coins do we have? And they always say my coin's better. And then you have the meme coins that we saw Trump do. What did it do? 1,200% in like 24 hours, but then it dropped almost as quickly as it went up. So meme coins are still going to go up and down, but I think it's just going to be so violent. It's going to be in, out. And for the degens who want to make those quick bucks, it's still a gambling house. It's a gambling house because there's so many coins, there's so much competition, and it's moving so quickly. So a long way of saying volatility is definitely dropping in Bitcoin because the market cap is so much bigger, and the altcoin season won't be as impressive as of the past because of that dilution with the competition out there.
And because of the confidence I think people have in Bitcoin, and because of the education that Bitcoin continues to see. And what's crazy too is that Bitcoin in a free market for money outperforms every other token from a market cap perspective. Maybe not from a percentage perspective. Obviously, it's a much larger asset, so you can't expect it. But from a total market cap perspective, it outperforms everything without a CEO, without a company behind it, without a marketing team, without direct lobbyists. And all of these other companies in the free market for money continue to underperform. Hey, let's finish with the last question from a user. First punch in the face, great name. What would it take for Australia to implement a strategic Bitcoin reserve?
That's a fantastic question, and I've got the answer. What it would take is America to do it. We just follow what America does. Let's face it. If America does it, we'll do it. That's all it will take. I would love to say, as a proud Australian, that Australia would act independently and take a risk and do something like El Salvador did and go alone and do it themselves. But history shows, my experience shows, and maybe my cynicism shows that what it will take is America to do it. Once America does it, then we will.
Yeah, I mean, we had the first major global super fund to allocate to Bitcoin futures. That was a couple of months ago. Can't remember the name off the top of my head. So there is
AMP.
some. Yep, that's right. Well played. There is some appetite for financial innovation here, but I agree.
It was such a tiny percentage. I think it was 0.05%. Hey, but it's still something.
But it's something, right? And we did see that.
But they didn't do that until American companies did it. So,
but we do have an article on the front page of, I think it was the Herald this morning, that the coalition wants to be friendly with crypto. I think that's evidence again of following the US. And so, I tend to agree with you. Great question. Thank you. First punch in the face. I wonder if that's a reference to the Mike Tyson quote. Everyone knows. Everyone has a plan until I get punched in the face. If it is, well played. If it's not, comment back and tell me what your actual reference with that is, because it's pretty funny. Thanks so much for joining us, Adam. Another great app. We'll definitely get you back on the show. Thanks for joining us, and I hope everyone enjoyed it.
Love your work.
Cheers, guys. As usual, actually, before we go, I have something quick to share with you. We are coming to Brisbane next week on the 4th of February. We are sponsoring the All Things Blockchain Meetup. Come see us, meet us, have a chat. Tell us what you think about the Strategic Bitcoin Reserve, about Bitcoin decoupling from crypto. Come and have a chat. We'd love to see you there. We have over 170 registrations for this event already. So please make sure you grab a ticket. Tell us that you're coming along so that we can fit you into the room, because it's going to be a pretty busy one, I think, which will be awesome. Outside of that, we'll wrap the episode up with a disclaimer, but please make sure to like, follow, subscribe, and catch you next week. Thank you so much, Binanceans. Have a good one. Hey, Binanceans. Thanks for watching. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and for educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance.